Yeah, boy! All right, hey, good morning, everybody. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, never risk money cannot afford to lose, keep your seatbelts tightened, and keep your hands inside the ride. Boom! Hey, look at me. Yeah, I'm at that age where I still wear clothes from like 12 years ago. Hey, good morning, Jerry Seinfeld. Yeah. Even white shoes. What are you talking about? Wait, I think they're back in again. I don't know if I'm supposed to dress like Madonna or Britney Spears anymore. Anyways, vintage. Good to see you, everybody. Happy morning. G'day, mate. Jumbo. Konnichiwa. Hey, my name is Wayne. I'm a currency trader. What do you do? Oh my God, you're a currency trader too? Right on. So welcome to Forex.Today. We are officially 15,000 Forex traders stationed around the world. We get together and we gather as a community, as a tribe, every single day. We align our satellites, we synchronize our watches, kind of like strategy and tactics. You kind of get it. I uploaded the wrong one, Jimmy. So I've uploaded the one from before, and now I got to find the older one. But anyway, so yeah, I'll get her done. I just honestly grabbed the wrong file. Coolio. So ask questions, get involved, take notes. The whole raison d'etre is that I am going to try to share as much of my 20 years of experience trading nothing but Forex. The overriding goal of showing you how to put together trade plans. No, I'm not going to throw you into a trade, but I will teach you how to plan your own trade. See, I want you to be an independent trader. I've learned to shut off the news. I've learned to cancel my subscriptions to newspapers and survive on my own gray matter noodles. My gray noodles up here, my soba, that's where my alpha lives. So I'm going to try to share the good, the bad, and the ugly that I've gone through over the last 20 years so that you can speed up your success and get there quicker. Okay? So I think you should treat this as 20% entertainment, 80% education. So I would take notes. And then, of course, I would document my notes like Daniel does every single day in the video recording so that it's archived and searchable from your YouTube back office or whatever you want to call it, your creator studio or whatever it's called. So you can actually search it. Okay, so anyways, that's what I would do if I were me. Our sponsor is tradersway.com. You're a Forex trader. They're a Forex broker. Let's fall in love, baby. So they're asking for an opportunity. Okay, they're asking you for the opportunity to earn your loyalty and respect. So test them out. Go to tradersway.com. Fill out the demo account form. When you're in the back office there, download MT4 or MT5 and play some trades. You'll see the execution speed is very fast. You'll see the spreads are narrow, the swaps are big. Okay, so try it out. Also, there are other resources that have been made available to you. For example, if you like these chart templates, you'll find the description you'll find the link in the description below. If you need to learn how to trade, the links are in the description below. So there's lots of resources there. Yes, and if you could, would you please tell YouTube this is quality content by clicking the like button? I'd appreciate that. That just tells YouTube that this is quality content. And that's that. So anyways, so here's our gold. Gold's come down to $1,000 or so, which is pretty cool. Right on. And last night during the Asian session, I took a little scalp off the bottom just to see what would happen around, I think it was between this 1909 and 1902, so it was like this green candle here. And, you know, and then of course I went to bed with a stop, which was right there, so I lost a couple of pennies. But notice how it did kick off the appropriate monthly pivot. Pretty interesting. It just, I wasn't there at that time. I was sleeping here, so I couldn't have done it any better. I know it wasn't good, but you never know. So I was there. Hey, where's my drawing tool? I keep clicking it. It's not. Oh, there it is. Boy, that takes a long time. All right, cool. So I got my drawing tool. So anyway, that's what a scalp is anyways. There's no more sort of logic to it than being at a reasonable price at a reasonable time. There's no real fundamentals behind it, right? So anyway, so I longed it here and put my stop here and then went to bed. Now, this is the monthly M2. This is the big buying pivot of the month. Now, typically, you're doing it earlier than the 12th. But nonetheless, it's legit if you're trying to get back in. Can I move my mic any closer? Well, my lips are on it. So probably not, but maybe I can try making it louder, but I think it's nearly max. Can you try turning up your speakers? Let's see. I don't think I can go any louder. In sooth, I know not why. Like, check this out, dude. Can I make it louder? Look. Look. Can I get closer? Hmm? Yeah. Yeah. You're my sweet baby. I love you so much. Oh, I should do it like this? Hey now, you are my sweet baby. Yeah, well, anyways. Meh. Or meth. Anyways, I'm just going to leave it here. That's how it's going to be. So anyways, meh. But notice on this silly little time frame, technically the market has turned bullish, but we are still below the fair market value. So this is sort of no man's land, but okay. It's all right. Guy knows his stuff. Guy is considered the golden microphone of Canada. He knows. So anyways, interesting, huh? But see, I think the time issue is, right? But, so I wouldn't get excited one way or the other. You know, I laughed, like literally I chuckle, you know, because you read like, oh my God, this is the Russians. The Russians have a cure, right? The Russians have a cure. The Russians have a cure. Hi-ho the Dario. The Russians have a cure. Yay! Like, seriously. If that's true, oh my God. Whoever bought up in here just is like what? And what do they call that chicken? Chicken Little? The sky's falling. The sky's falling. Really? You dumped $1 trillion worth of gold because of that? So anyways, yeah, the Russians, man, the Russians. Pretty funny. Although it just looks like it's very high, it's very elevated. This is very much, you know, a take profit zone. And this is very much a sell entry. And then the news comes out and they're like, it's the Russians, it's the Russians. Okay. Maybe it was this reversal on Monday. Yeah. Everyone's a little bit Russian, Alex. Are you in Russia? Yeah, vodka. Yeah, I have a few Russian friends. One friend of mine, uh, I picked him up. He was an exchange student, but he didn't speak English very well, and he spent all his time reading Russian poetry. He was a cool dude. Anyway, so one day I said, Gleb, and I put down a bottle of vodka in front of him, and I said, you and I need to talk, because all you do is talk to all the Russians, right? So anyway, so we became good friends that night. But it was interesting because he was from Kiev. So I said, "Oh, so you're Ukrainian? I thought you were Russian." He's like, "No, I'm Russian." "Oh, so when did you move to Kiev?" "Oh, I was born in Kiev." And so we had this like, "So wait, that makes you Ukrainian?" "No, I'm Russian." And anyway, so interesting conversations. I'm like, "Wait, that makes you Ukrainian then?" "No, I'm Russian." Like, oh man. Are pitchforks good to use? Do you like them? What do they tell you? Like, Peter, before you go into like, are pitchforks good? If you can't do the math, then don't use them. There's so many people looking for something to sell you. And there's a dude, by the way, I can't remember his name. I think David Pegler, when he was still in the U.S. Army, did some of his training and then came over to FX Boot Camp. And anyways, there's quite a bit of math in here. And if you don't understand the math, then it's pointless. Otherwise, you're just, right? Right, you know, I know your customer says Russian is an ethnicity, not a nationality, at least for Russians. The last part is the part, which is interesting to me, anyways. Right? So anyways, so I would be very cautious. There's a lot of math that goes into here. And then you have to say, like, can you explain to me the difference between, let's say, a standard deviation analysis versus your Andrews pitchfork? Can you tell me the difference between, let's get it in for it. Like, so that's a linear regression. Can you tell me the difference between this and that? So now we have a standard deviation, we have a linear regression, and we have an Andrews pitchfork. They're all kind of similar, but they're all different. So Peter's like, hey, so are pitchforks good to use? Only if you truly understand them. I wouldn't just follow some other guru's, you know, I don't know, opinions or processes. Like, I really try to explain why things work, not just how they work, right? So I know there is a guru, and it's this guy that David Pegler found before he found FX Boot Camp. And of course, we're talking 15 years ago. His whole career was teaching people Andrews pitchfork. It was the thing he isolated. Like, if you only knew Andrews pitchfork, you would be rich. No, it's just a tool, dude. So if you can't do the statistics and you don't know the difference, and it gets really tricky with Andrews pitchfork, where you say, well, a certain percentage of the time it goes back to the mean, and a certain percentage goes back to the mean. The problem with, I think, okay, with Andrews pitchfork is that if you're using a pitchfork, you must manipulate the pitchfork as time goes by, right? So first of all, oops, see, I already did it wrong. Hang on. Can't even see what I did. No, that's the wrong one. All right, I've already made my point. I didn't mean to ruin it. I tried to do it right. Hang on, let me do it again. Okay, so you got to pick a trend, a high and a low. Okay. And then you see like, oh, that's not helpful to me. Okay, and so what I'm measuring is sort of the trend, the high and the low, and then you're like, it's not working. And then the way I do it, and again, this might be wrong, but once it makes a new higher high and higher low, you adjust. Okay, and this should be a little tighter. okay? And again, it's not even doing this very well for me. There we go. And then it makes a new higher high and higher low, and then you got to adjust. But the thing is, you keep manipulating it, okay? And then inevitably you don't see what you want to see, so then you change it, okay? And all these variables, I think, are very dangerous. And you're always adjusting manually. To me, and I apologize if I offend anyone here, but to me it's like Elliott Wave, where if you lose money, it's because you counted the waves wrong. I hate that. I hate that. I hate that. You're counting waves and you lost money because you didn't count the right wave? You didn't count the waves properly? Why don't you learn some fundamentals and just trade in the right direction? Or why don't you just learn some price action? Like, to counting waves wrong, that's what you're doing. You're managing money based on some mechanical processes. Like, oh, I guess that's not a three-wave after all. Oh my God. So now you're not even paying attention to the market. You see what I mean? You're not even paying attention to reality. You're fitting everything you do into some dude's processes from 50 years ago. Like, and maybe the markets have changed in 50 years, right? Like, so anyways, this subjectiveness, if you will, the subjectiveness of how and when you move your pitchfork, I find dangerous. Because you're going to inevitably, I think, fit it to what you want it to do, which means you're not seeing reality, you're seeing what you want to see. Now, contrast this with like a study like this, a linear regression, 2 standard deviations of a mean. That is just math. And the way you adjust it over time is you just keep moving it as new candles appear. You add those to your data set, and it will always calculate the rise over the run, which is your M. It'll always calculate the intercept. You'll always, right? It always will do the math, and it will always be factual. It will always tell you the math depending on the data set you're measuring, okay? And if you start with this, every time you get a new candle, just update it. And you just update it. And you add the new candle. And it will always tell you the linear regression. There's no subjectiveness at all, except for how much data do you want to put. And that comes down to trend versus scalping, okay? But here's the cool thing. The math is always the same. You can't screw this up. You're only going to measure what you're going to measure. It'll always be right. Okay? Versus like, well, do I measure this bottom? Do I measure this high? Where do I start? How do I move it? Do I count this? Do I count that? The more decisions you're going to make, the more random variables and outliers you're going to include in your data set, and it's just not right. Okay? So, and that's a big but going back to, I think it was, who was it, Peter? Somebody asked. Originally, who asked the first question? I think it was Peter, wasn't it? Anyways, oh yeah, there's Peter. So, if you learn the math, if you learn the mathematics, Peter, and you can explain to me the mathematics behind an Andrews pitchfork and why it would be a good tool to measure whatever it measures inside of a data set, if you can teach me the math and then tell me why the math is important to predicting plausible future behavior of the market, then go ahead and use it. Okay? Now, I can teach you the math on MACD. I can teach you the math on stochastics. I can teach you the math of this linear regression. I can teach you the math of standard deviation, right? So I understand what the math is doing. Therefore, I can interpret what it's showing and say, oh, this is how it's going to help me be a better trader. But I don't rely on it because it's some squiggly little lines on a chart and it helps me make decisions. No, I'm already making decisions. So I look to the data to make the decision. I don't look to the algorithm. You see what I mean? There's the difference. So and you can master it. And by the way, David Pegler would be the guy I would send you to learn Andrew's pitchfork. But I don't think he uses them anymore, so that might say a lot. Okay. How far back do you go? Well, yeah, and the answer, how far back do you go with these channels? It's whatever time frame you're planning to trade, right? So let's say you're going to do a day trade or a swing trade. Okay. So you can see the longer time frame, the math is suggesting, based on this long-term point of view, the math is suggesting only that the market has been bullish and check this out, it became 2 standard deviations from a mean, which means 95% of the time that we've measured here, we can maybe even update this a little more, but I got the, okay, let's try it here. 95% of the time, based at the beginning of this move, price did not go higher, or nor did it go lower. So this becomes almost an outlier. It's gone too far, it's overbought, and price tends to revert back to the mean, the average. And this is the average price over that period. So on average, gold should be worth about 1,800. Here we are at 2,100, way, 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 way high. So based on monthly pivots, based on weekly pivots, based on standard deviation analysis or regression analysis, this is an opportune time for profit taking. Oh my God, we talked about that last week, by the way. Okay? And then, if you saw this coming, this was the pivot. The monthly R1 and the weekly M3. That is your sell. Off of 95% overbought is the way of looking at it. Based on measuring months and data, this is 95% overbought, probably looking for profit taking. I don't think people truly sold this. I think everyone got out. And it's laughable because down here, the media is suggesting it's because of the Russians. Yeah, well, we kind of knew it was 95% overbought last week and probably a good time to take profit, okay? And notice that it rallied up, hit the major sell zone for the week and collapsed, okay? And where did it find support? The most bullish pivot of the month. Are these things coincidence? Of course not. Is it the Russians? Okay. But I'd hate to manage $1 billion portfolio always worried that the sky is going to fall. How did you determine it's 95% overbought? This is the math. Okay? This is the average price over the time we measured, which goes back a couple of months. So we're talking about a long-term trend. This line here is 2 standard deviations from the mean. This is the mean, the average. This is 2 standard deviations. The 1 standard deviation is probably somewhere in here. This is 1 standard deviation, okay? 1 standard deviation equals, I think it's 68.2. And 2 standard deviations represents 95%. This is statistical mathematics. Okay? Okay? It's math. And the math might be more important than the Russians. Right? Is it M3 to M1? Yeah, so the basic operating procedure would be here to this green zone. Okay? This is sort of the Arctic turtle idea, where those that are trading monthlies are trading monthlies. And this is a very, very important monthly pivot. And this is a very, very important monthly pivot, especially when it's 95% overbought, okay? So some people are trading the monthlies, and this is what they're looking at. And some people are trading the weeklies, and this is what they're looking at, okay? And then you can see, if you can combine the 2 forces, you know, everyone got out around 1906 and 1875. Okay? Like literally probably what, 75% of the market. And then somebody bought back in. Why? Because they made money here, they exited, and now they're buying back in. Remember, this doesn't say short, this says massively increased risk. I'm pretty sure, right? I'm pretty sure we talked about increasing risk. Yeah? Pretty sure we had this conversation. Massive increase in risk. And I said, your alpha is determining, once you've noticed it, once you're preparing for this increased risk, your alpha is your ability to make decisions to manage the risk. Okay? And so, no, it wasn't pivot points, it's standard deviation, it's statistical analysis. Okay? By the way, I took an entire class on statistical analysis, and I was just loving it because it talked to me through, you know, the megaphone of Forex. So if you were going to do, if you're going to take a college level course on statistics, I think it would be a good idea. Aren't all elections in Belarus rigged? Yeah. I've heard Belarus is a beautiful country. Econometrics? Not specifically, no. Not, I mean, indirectly mostly, but econometrics specifically, no. So, like, my master's was essentially an MBA with a focus on finance. Okay? So, so my undergrad, right? My bachelor's degree included economics. And so it's sort of like, the answer is no, but if you take all the parts, all the parts were there, but I didn't take a particular class in econometrics because that would have been less of an MBA program and it would have been more of a master's degree in economics. But I already know enough about economics, and I love finance too. I love cash flows and all that. So I like that kind of analysis. And then you fold that into a management program, which gives you points of view from all over the place, right? That's the cool thing about MBAs and stuff. So I learned about diversity. I learned about management. I learned about organizational behavior, right? Things outside of the world of econ. But if I had gone the econ track and not the MBA track, econometrics would have been a big part of that. I didn't do like machine learning, like I learned statistical analysis of data sets. So I can clearly talk about all the math that goes into Forex, but I didn't do like machine learning. I learned how to program in R, but I didn't take it to that next level, which would be machine learning after you do statistics. And I'd be doing more R stuff. I'd probably do some Python stuff. But look, I don't want to get over that. I don't want to do all that. That's not where I'm going, right? So that's why I didn't go in those directions, right? So I've done R. Is it cool? Well, don't forget, if you put a comma in the wrong place, it sucks, right? So, so it could be a lot more cool in my opinion, but programmers love that, right? So can I do it? Do I know what it is? Have I done it? Yeah. But econometrics would be very interesting. I'd do the class, but that track is on, it would be the deviation from where I want to be, right? So, yeah. But it'd be a cool class. There's another thing I could do at Harvard Business School. So like this fall, I'm in a cohort to study alternative investments and do some research there, just to kind of polish up my my degree. But they also have business analytics, and I'm wondering if inside the business analytics you would have econometrics. But anyways, yeah, that'd be very cool. That'd be a very cool thing to study, Alejandro. Hardcore macroeconometrics. Yeah. Be very interesting. Ultimately, like if I think about it, I would hire somebody to work for me that can do that. And we would have massive conversations. And I'd love them. But do I want to do the math all day? Do I want to? No, but we could have the conversations about it, right? So anyways. All right, so let's move on.com. This is very, very good news on the short run. Okay? But you know what the big surprise to me is the strength in the Swiss franc. Amazing. Yen is weak, dollar's weakening again, all of that being good. But in the face of dollar weakness and yen weakness, we have massive Swiss franc strength. So you got to be careful there, right? Okay, so what do you want to do? Well, I'm a bull here. And one of the things we talked about is the double bottom of a double bottom. Oops, wrong one. Do you guys remember that? How to set up a reversal? Okay, so this gives me permission to start tiptoeing into the water. Okay. Okay, I guess I'll do it this way. So that's what I've been looking for over the last few weeks. So now I can try either this week, not at this price, but I can try later today or tomorrow or next week, and you'll see if it does continue up, it's going to pull the moving average right and up. So that means by Monday, this moving average will be right on that tail, right on the wick. Okay? And you'll say, why didn't I buy it off that 21? Well, because it's not there now. Okay? So this simply gives me permission to engage cautiously. Okay? I can only return fire here. Doesn't mean I just go out guns a-blazing, buy, buy, buy. But I do have two scenarios I can consider. And this would probably be Asia, because I can't buy high, so I have to wait for the dip. Or it kind of, let's say more like this scenario. Okay? So I could have a little Fibonacci here if that makes me feel better. Okay? I can use a roll reversal if that makes me feel better. So maybe something like this. So maybe more like a 382. Okay, I'm just using this down here. And I make a decision. So now I'm done with my strategy, right? Because this would go up, right? So now I try to carry that out. I need to measure a dip down and buy the dip up, and then buy the continuation. Okay. So right now that means somewhere maybe around 17, I don't know, 1780, more like 1750. I would have to guess 1750 would be the number. Okay. Okay, and that means I'm going to adjust this just so to reflect my thoughts a little better. Okay, I'm thinking more like there. Okay, and that, of course, now lines up perfectly. So there you go. There's strategy. Okay. Doesn't mean it's overbought on a 15-minute time frame. Whatever you're measuring. See, it doesn't know what you're looking at. Okay? Algorithms don't think. So if you tell it to measure this, it will tell you the answer. Okay? If you tell it to measure this, it'll give you the answer. You're the one setting the time frame. So if you're on a 15-minute chart, it'll only tell you what you're measuring. So you give it the data set. Okay? So you might say, well, since we've been consolidating like this week, you can see right now on a 15-minute chart measuring price action this week, we are currently 2 standard deviations from the mean. Okay? Now, right now, I'm also on an even tighter time frame. I'm measuring a smaller data set, but it's essentially 2 standard deviations from the mean, and that's what this is. My biased price action pivots. Remember, they're not market pivots, they're price action pivots. So that's what the green and the red sloped areas are. They're measuring price pivots. Okay. Now you can open that up and say you want to change the data set. So you say, okay, data set, measure 244 candles. See, I'm just adding more data. Measure 244 candles. Okay, so what is it doing? It's adding the first candle, the second candle to the first candle, the third candle to the second, and so on and so forth, and calculating the average over that time. So if all you measured was this time right here, it will give you an average. There's the average price inside all of those candles. If you add some more data to your data set, aka more candles, it'll notice that price just collapsed. So that changes the average. Now, it's also not just looking at the average, it's looking at the slope, y equals mx plus b. Slope is the rise over the run. In this case, the rise is negative over time. The rise is negative. It's a negative rise. It's a fall. So it's really fall over run. And it's measuring and measuring and measuring. You keep adding candles and it keeps adjusting. See, it's not subjective at all. It's telling you the average and the slope of the average and 2 standard deviations of the average over that data set you told it to measure. And it keeps telling you. And it keeps telling you. Now price is going up. There is a rise over the run, but currently it's been a fall over the run. But it's an average, so it keeps changing the average. And because now we're including rise over run, not fall over run, right? The slope is changing and becoming more and more positive. Now, I'm measuring all the way down here now. There's been another collapse, and you can still see that on average, over that period of time, it's been more down than up. Okay, it's making lower lows. More often, it's making higher highs. Okay, now we hit to the bottom of the channel, and the channel turns north, and you can see changed in the last couple of days, changed the slope from 45-degree angle to less than a 45-degree angle. Okay, and now we're at this point where, based on this data set, when prices get this overbought in this currently technically downtrend, price tends to revert back to the mean. Doesn't mean it will, it just has over this period of time. And of course, I can just keep adding more candles and it gives new data. okay? But it's irrelevant of your time frame. All it's looking at is the data that you've asked it to measure, okay? So in this case, I've asked it to measure 244 candles. Cool. Okay? And you can change it again, whatever you want. Change the math. We'll make it 366. Okay? So based over 366 15-minute candles, it measures the average, the slope of the average, and how far price tends to move away from the average before it reverts back to the average. That's why it's a mean reversion. How oversold does it get before it tends to move back? How overbought does it get before it tends to move back? Okay? You can do this on any time frame you want. So on a 1 minute chart, it's been more bullish than bearish over the last 366 1-minute candles. So if you're a scalper, maybe this is important to you. So right here, right now, on this 1 minute chart measuring 366 minutes of data, we are 1 standard deviation of the mean, which is 68% overbought. And the last time it did it, it reverted back to the mean and through the mean to the point where it was 68% oversold. Okay? 68% oversold, 68% overbought, 68% oversold, 68% overbought. And now, maybe it does this, maybe it does this, but you can see it's just telling you that it did that. That this is a key price. It doesn't care that it's 1.18000 psychological level. It doesn't care that it's a pivot point. It doesn't care you're on a 1 minute chart versus a daily chart. It's just measuring the last 366 candles, and you are the one that throws down what time frame you're studying and measuring. Okay? And so now you could just leave it like this. By the way, this indicator is available at metatraders.com. Okay, we'll leave it there. And let's kill some objects here. Kill the Fibbo, we don't need that. Label we'll leave. What else is on there? Where is this? Trend line, probably don't need. Trend line, delete, trend line, delete, trend line, delete, trend line, delete, trend line. So I'll just trend lines it. Won't even let me grab that. Okay. So somewhere in here, there's an average price. Average meaning mean. Okay. Somewhere in there. But I don't, oops. I guess that's gone. Can't I undo this? Is there an undo? Anyways, there you go. Yeah, so there's a custom indicator. So I had that programmed. Okay, price action pivots. That's a custom tool that I had programmed. This is mine. I came up with the idea, and it's available at metatraders.com. Yeah. So now you can have pivot points in, right? Because pivot points are based on standard deviation analysis of the market, and then the price pivot points are based on standard deviation of price action. So you can include them together, right? And something like that would look helpful. See, like, for example, we were talking about the profit taking, you know, is it the Russians? Is it the Russians? Is it the Russians? This is the most important selling pivot point for the month of August. Okay, here's July. In July, okay, this is the most important buy zone. Buy. Okay. So we get to the very last day of July. We're 2 standard deviations from the mean. We're 95% overbought. Do you understand? At the very least, as a bull, you should take profit. Do you get that? Like, it's on the last day of the month. And it's like, hey, bro, what more do you expect? And because these pivots look at not just this month, it looks at the month and it looks at the next month. When you were here, you already knew this was the sell zone for bears. Now, you don't know if they're going to sell, but you know they want to. So, like, what were you doing here? Praying? You were hoping it was going to go up more? What do you mean, hope? What the heck does that mean? This is the exact area you were supposed to buy in July, as they say in Georgia. And then on the last day of July, this is the exact area you're supposed to get up. Huh. So was it the Russians, or was it just how you're supposed to trade? I laugh when I hear stuff like that. It's the Russians. You're joking. Is that the news fit to print? You're like, really? 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 Seriously? No way. What? Can't be. Shut the back door. There's no way that's true. But anyways. Okay? So, here we are, just cruising along over a long period of time since May. So now I'm measuring 366 4-hour candles. Okay. Maybe that's too far back. Let's just be conservative, 2, 3, 3. Okay. And you'll see there's slight differences. Okay. You just have to decide how many candles do you want to measure. That's all it's doing. Does anyone know the fib number after 366? I don't know. We'll put 555. Okay. So since April, we move sideways, up and down, staying inside of all of this. Okay. So you can see we're about average in price on the 4-hour chart. See, we're exactly average. Okay, so we're exactly average. We're the average price. Now, here's the funniest thing. So now you're falling in love with the latest new toy, and it's going to help you get rich. Let me show you what actually happened. We moved sideways, and then we moved up, then we moved sideways, and then we moved up, and then we moved sideways. What do you think is going to happen next, bro? Good deal, bro. Good deal. I mean, why make it more complicated than it really is? Okay. Buy zone, buy zone, buy zone, and the buy zone is down here. And next month it's here. Bum 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 bum. Beep 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 beep. Boop boop beep beep boop boop. Boom 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 boom. May I please get a like? There's 230 people and only 81 likes. Okay? Trust me, this is more fun than taking a statistical class at Harvard. My PhD professor would get so nervous that you could hear him try to breathe while he was talking. You're like, dude, that's so distracting. There you go. Okay. I can remember everything, but I can't tell what's true or dreams. Let me show you the Swissy. It's amazing how strong it is. Okay, we went from 81 likes to 98 likes. Okay, I guess it's better. Okay. So this is where I tell you that not just the price matters, it's the time. What I'm about to show you is that if you're not getting the results you expected, very often you're trading perfectly well at the wrong time. To say it differently, you're kicking down the front door fully armed, locked and loaded, but you're kicking down the wrong door. The bad guys are in the house. Right next door. You're doing everything right, except you're kicking down the wrong door. Okay, check this out. Key moments in time. Let's do this in a different color. Let's do it, okay. Key moment in the day. 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 Oh my God. And you might be trading here and you're like, what the hell just happened? And then you're trading, I don't know, here or here, like, you know, like just you're trading the wrong time of day. So the period from this hour to this hour, nothing happened. Okay? Or you're buying here, okay? And you're selling here. And you're buying here and you're selling here. And you're like, what the F is going on? How come every time I sell in a falling trend, it goes up? And then I buy it and then it goes down. And then it goes down and then I sell it and it goes up. And son of a, what did you just do? Oh, my broker's hunting my stops. No. You might know the right price to buy and sell, but you got the wrong time. There are major times in the market when you should be ready, willing, and able. And the other times of the day, your gun is in your holster. Okay, so you got to get the right price and the right time, and all aligned up with your with your brokers or your bias, all lined up with your bias. Now, right now, Swiss franc is very strong, and I'm quite surprised to see it. So I'm not interested. I only want to sell Swiss franc. So I already know to walk away, but I just want to point that out too. Like, I don't want to buy Swiss franc. I want to sell the USD, the yen, which means I want to buy yen pairs. I'd like to buy Swissy when Swissy's on the right, but it ain't happening. So here we are. So here's our euro. Let's see if you can make money in the summer. This is the exact buying price, okay? And this is the exact take profit. Oh, you're welcome. That's this week's swing trade plan, guys. There it is. Cool. That's euro. You can look at Aussie, okay? Aussie. Where's my CPP? This is it right here. Here's the central pivot. So the target here is R2. We're nowhere near R2 quite yet, but you would have been a buyer at 75.80, and we're at 76. You're up 50 pips. Nothing to. Now Aussie's not strong at the moment, so that's why it didn't work out very well. Kiwi is also quite weak, and you can see that this was the buy price, and we're all over the place. But this is weak, and this is weak. So you picked the wrong horse. Happens, bro. Happens, bro. Bro. I have to roll it. Bro. How about kitty cat? Remember, I wanted oil to go up, right? Do you guys remember I said all you have to do is make a decision on the direction of oil? Is it going to 30 or is it going to 60? You guys remember that? That was like 2.5 days ago. Well, check it out. This is the exact buy price on Sunday. Well, actually, this is, well, anyway, Sunday. And this is the target, the pink zone. And then, of course, I would look at, logically, I would look at and say, well, I have to pick a price somewhere between 80.40 and 81.0, and there's a monthly, so, I mean, clearly that would have been it. So you should already be out, and you can see the reaction here. Now you're saying, well, Wayne, it's still going up. Okay, they're risky pips, but the fact it kicked over the 4-hour makes me feel good. It's also a roll reversal, so that's good. And remember, we talked about this whole thing on oil, and I said, right, oil up going to 60 means positive global macro, yen weakness, CAD strength, because they're an exporter of the oil that's appreciating in value, and CAD yen up. I think the way I did is I said, if you think oil will go to 60, and then I showed you 20-something trades that you would expect to follow in that same direction, and how you would set it up, whether you're selling USD CAD, or you're buying CAD yen, or the direction of this, that, or the other thing. Does anyone remember that, like 2.5 days ago? Does anybody? Because I think it was the same session where some guy's like, why don't you just tell me what trade? How come you don't have any open trades? How come you don't... I'm like, dude, if that's not enough for you, where I outlined 20 different strategies based on the one idea, then you got to work on something else than technical analysis. Okay? You had to make one decision. Is oil more likely to be at 60 or more likely to be at 30? And if you thought 60, this is clearly, without a shadow of a doubt, something that should have been trading Sunday and Monday and Tuesday and Wednesday and Thursday and Friday and Saturday. Like, dude, right? Dude. Yeah, this is what you should have been doing ever since. You're like, you know what? I think oil is going to go up. Therefore, I'm going to take his advice and I'm going to trade this long or not trade this long. And when you break it down to intraday trading, this is so now we're not talking about strategy anymore. Now we're not talking about bias. All of that is set. Your bias, global macro expansion. Your strategy, oil goes up to 60, taking CAD yen with it. You had that opinion here. So now you're on a 15-minute chart, and every single day, this is what you're going to look to do. You're going to buy dips. You guys remember that? So the one thing you have to do now is buy dips in an uptrend. So where are the dips, bro? I see plenty of them. Plenty. Plenty. Okay? Now here's the interesting thing. Weekly swing trading, this is the exact price you want to be long on Sunday, not even Monday, on Sunday. Okay? And like I said, the target is in here, so it slams into the monthly inside your take profit zone. You should be out, bro. This is riskier trading. You're throwing down you're throwing down a long position into an exit zone. Not ideal trading. Now you'll say, well, Wayne, it's the 4-hour 21 and stuff. I get it. Yeah, blah, blah, blah. Roll reversal. Dude, I get it. The thing is, this is an exit. So if you take it, you have to understand you're ignoring weeklies completely and you're only trading monthlies. So I don't know if that's what you're doing, but that's what you're doing. That's what you're indicating by your behavior. So you got to go this one. And you're like, okay, so now you're going to explain your trade plan this way. Okay? You're essentially, you're kicking off this central and you're going for 81.50. So now that 4-hour retracement was a kickoff of this roll reversal. And this is what you're doing. Now, if you can't explain it to me, that you're taking this up to 81, I don't even care about 81.50. Now, most likely it's going to do an Arctic turtle and come up in here. But on the short run, you're thinking 81. Now, if you can't explain that to me, then it doesn't exist and you're just hoping. Right? Which is another form of degenerate gambling. Right? A degenerate gambler says it's going to fall because it's this price and I bet you anything it'll fall. So you throw down a trade. Right? The opposite of that is I see all the resistance in my face and it's statistically and mathematically unlikely. But I'm going to do it anyways. Okay, that's the same. You have no discipline, right? So you need to be able to say, despite everything on the weekly saying get the hell out, you're going to buy again. And it's because you got a much bigger trade plan and you're going to take it north. Okay, well, I'd still say, you know, a dip would be here, would be safer, but that's up to you. It's not my decision. Okay. So anyways, that's how you break it down. You see that? 1-minute chart, 15-minute chart, right? Weekly swing, monthly swing. But at least you know in that area whether you're a bull or a bear. So like I can break this down differently and see if it helps. We can do like day trading. Okay. So Wednesday, Tuesday, Monday. So it's been hard to trade on a daily because it's so unbelievably bullish. So I guess it was a good plan. Now you could, there's no pivot point day trades per se, but there's moving average, right? There's moving averages. So on Sunday, Monday, you could have bought it based on the bigger analysis, and then you ride the 5-8. The 5-8 cross didn't even happen until last night, and then the new one puts you back in. This is this trading that I outlined in my book. Okay. Very, very classic FX bootcamp stuff. Can you guys see anything else? For those that have taken my day trading course, Asia Fade, right? Asia Fade. And guess what's likely to happen? Asia Fade. Okay. In this case, it didn't get into the pivot zones, but it kicked off the 21 every time. So if I were me, I would plan on, which is much different than guessing, I would plan on the 21 EMA being, let's say, here tonight. And I'm going to look for an Asia Fade and try to kick off the 21 or the central pivot for the day. And we call this day trading. Right? And I'm already thinking about tomorrow. Today's dead. Today's dead. What do you mean? You're not long here? You don't know how to day trade. Cool. But that's what's likely going to happen tonight. So this is where I'll be Tokyo Open. Somewhere between Auckland, New Zealand and Shanghai. Long and strong, down to get the pippin on. So I already have tomorrow planned out right now. And this is the problem where amateurs show up and they're like, what do I do today? What do you mean, what do you do today? It's already done. We're already done. A lot of people just log into New York and they're like, what am I going to do today? You're going to take profit because you bought this like 18 hours ago. No, I want to scalp these next 5 candles. Oh, okay. And then it'll be like this in the next, right? Cool. 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 Right on. So only 50% of you liked today's webinar, which disappoints me greatly. There's only 118 likes. I thought it did all right. I did all right. That's too bad. So I have to apologize that I disappointed 50% of our audience today. I will try my best to do better tomorrow. But maybe you're watching a recording in the future. And if so, would you leave a comment in the recording as well as click the like button? I'd appreciate it. Okay. So I hope you appreciate that I don't put you into trades, but I am trying to make you understand how and why it works. I don't ask you to rely on my trading strategy or my methodology. You know, I don't want you to have to rely on me. I want you to be a huge, massive success. With or without me, with or without me, oh, oh, right? I want you to understand how and why, so therefore you can do. Okay? But you did learn some pretty advanced stuff that I think your last 3 gurus cannot do. I don't think they've done the math. I don't think they've passed the test. I don't think they have the degree. They're like, oh, wow, you have a degree in macroeconomics and financial. How about a master's in financial management? You have all that? No. Have you taken college level courses in statistical analysis? No. Wait, so but you have a Series 3, right? You've been licensed and registered, is that right? No. Oh. Then why are you a guru? It's not that hard, just do it. So anyways, enough with me being facetious. Thank you for being in my life. Thank you for being part of the Forex.Today community. Thank you to Traders Way for being such a, reaching out to you by providing or ensuring that you have education, because that will help you become a success. And then maybe just out of, like I said, loyalty and respect, you choose Traders Way as your broker. I think that's really cool. They're making the first step. Okay? Anthony Winter says, do I think gold will go back to 2000 before January? Why don't you open up your chart and figure it out? The technical analysis is not that complicated. And why don't you do some research about the gold market so that you can determine that. Okay? But I'm not your financial advisor, buddy, so what I think is irrelevant. So anyways, let's do it this way, this way. Peace on earth, may the pips be with you, may your profits be above average. It's a Wednesday today, so I'll see you Thursday. Awesome stuff.